Good morning, all of you. Now, we are going to study the environment of business finance. What is the title of this topic? Environment of business finance. Now, we have to understand the introductory part. Business and finance, these two concepts are different. Okay? Business means busy in doing something for earning the profit. All those activities are called business activities. And finance means nothing but a lifeblood of a business. Okay? Lifeblood of a business, because without lifeblood, without blood, business cannot be run, business cannot be complete their activities. Okay, that's why the finance is as important as a blood of the human being. Okay, in the body of the human being, same situation you will find about the finance in the business. That's why business finance is treated as a lifeblood of the business. Okay, then basic foundations of all kinds of the economic activities are also conducted with the help of the finance. What are the basic foundations of the all kinds of the economic activities? Different types of the assets you have to purchase, different types of the material you have to purchase for establishing and starting the business, and all such activities are related with the finance. That's why basic foundation of the all kinds of the economic activities are completed with the help of the finance. That's why finance is essential here. Then business needs money to make more money. It means that with money we can make more money. It means that with the help of the money we can make investment, we can purchase different types of the assets, we can purchase raw material also. With the help of that raw material also we can produce the finished goods. It means that after completion of different types of the procedures on the raw material, definitely it will be converted into finished goods, and that finished goods we can sell out into the market after charging percentage of the particular profit. Okay, that's why we can make more money with the help of that money. That's why business needs money to make more money, and that is also essential here. Then integration and coordination of the production, marketing and finance. It means that there should be integration and there should be cooperation of production, marketing and finance. It means that whatever may be product you are going to produce in your organization, that product should be marketed in proper manner, and such type of a marketing activity should be conducted. And also finance, sufficient finance you have to create for fulfillment of such types of the needs. Okay, that's why what is needed here, integration and coordination is needed. Integration and coordination among production, marketing and finance. That's why finance is essential and finance is important. Then another thing also I would like to explain here, money is an arm and leg. Why this is said here, money is an arm? Arm means with the help of money you can make manufacturing, you can make production, you can make all types of the sales, you can make marketing also, and you can earn the profit also. That's why money is nothing but an arm, and leg means your business can make prosperous, your business can make prosperous with the help of the money. That's why there will be development with the help of the money. That's why money is treated as a leg. Okay, and leg is used for making development. That's why it is an arm and leg. Then provision of money at the time it is wanted, wherever and whenever there will be the need of the money, it should be created. Okay, it means that as per the need of the organization, as per need of the organization we have to create the fund, and that fund we have to create in kind of money. That's why provision of money at the time of uh, future needs or fulfilling the needs, it should be completed. Okay, and it should be made in proper proportion. That's why provision of money at the time it is wanted. Okay, that's why finance is important. Try to understand. Now, what is the definition of finance? We have to understand What is the definition of finance? What do you mean by finance? Now, success. First of all, we have to understand the concept success. Success means productively use of money or finance. It means that when your business will be successful, when you can say our business is successful, definitely you can say your business is successful when your business is going to use money or finance productively. At that time, definitely you can say your business is successful. Then Ray Jones and Dean Dudley's observations. What is the observation of both of these fellows? The word finance comes indirectly from the Latin word finis. Okay? Paul G. Hastings said that finance is the management of monetary affair of a company. What is it? Finance is the management of monetary affair of a company. It includes determining what has to be paid and when, raising the money on the best terms available, and devoting the available funds to the best uses. It means that this definition is also important about the finance. Try to understand. And this definition you have to understand, which is given by Paul G. Hastings. Okay. Then another thing we have to understand, another definition also we have to study. That definition is given by Ronald Burns. What definition says? According to Ronald Burns, financing is the process of organizing. Financing is the process of organizing the flow of funds so that a business can carry out its objectives in the most efficient manner and meet its obligations as they fall due. Okay? It means that this definition is given by Ronald Burns. Okay? According to the Encyclopedia Britannica, business finance defines finance as the act of providing the means of payment. What is it? Very simple definition is given about the finance. Finance as the act of providing the means of the payment. It means that finance means nothing but an act. What is it? Nothing but the act of what? Of providing the means of payment. Okay? This definition you have to understand, which is given by the Encyclopedia Britannica. Okay? Now, essential features of the finance we have to understand. What are the different types of the essential features of the finance? After considering the exact meaning of finance, exact definitions of the finance, we have to consider here, we have to understand here what are the different features of the finance. Essential features are there, and those features also we have to understand. First feature is there, acquisition of funds on reasonable terms and conditions. You should have to create fund, you should have to acquire fund, but in what conditions? On reasonable terms and conditions. Whatever may be terms and conditions are there, those terms and conditions should be reasonable. Okay, it means that it should not be too costly. It should not be too costly. It means that whatever may be terms and conditions are there, those terms and conditions should be reasonable. Then second feature we have to understand, administrative area. Finance relates with administrative area. It means that arrangement of cash and credit administration has to make. It means that such type of a function is performed by the administrative officer. That's why a finance relates with the administration, and that's why administrative area relates with arrangement of the cash. It means that making the arrangement of the cash and credit also. And this is also another second feature of the finance. Third feature we have to understand, device. Finance is device for carried out the objectives of the organization. Each and every organization is running for the earning the profit. What is the main object behind such type of organization? To earn a profit. And with the help of such finance, we can carry out our objectives of the organization and we can earn the profit in sufficient manner. Okay. Then another feature we have to understand, concerned with cash, all transactions. It means that finance concerned with cash, and with the help of the cash we can perform our all duties. We can perform our all activities of the organization. All transactions can be completed with the help of the finance. That's why for completion of the transactions, what is needed? Cash is needed. What is needed? Cash is needed. It means that finance concerned with cash and finance relates with the all types of the transactions, and this is also another feature of the finance. Next feature is their application. Whatever may be funds you are having, whatever may be funds are available in the business, those funds should be applied in profitable manner. Try to understand whatever maybe departments requirements are there are different types of the department organization in the organization, and there are also requirements of the particular departments, and those requirements you should have to fulfill with the help of the finance also. That's why whatever maybe applications of the funds are there, those funds should be applied in profitable manner, and this is also another feature of the finance. Then concept of business finance we have to understand. What is the concept of business finance? Finance, when applied to any business unit, is termed as a business finance. It means that whatever may be finance is there, when that finance is applied, try to understand. When finance is applied to any business unit, it is termed as business finance. Okay? Each and every activity concerned with, try to understand, each and every activity concerned with planning, raising, controlling, and administering of the funds used in business. It means that such all activities are related with all these four things. What are those four things? You should have to prepare plan. You should have to make planning. You should have to create the fund. You should have to raise the fund. That's why raising is also essential. Then controlling upon use of the fund should be, that is essential. Without controlling, what will happen? You don't imagine what will happen. Okay, that's why proper controlling should be there on the business finance also, and administering the funds used in the business. In this way, these are the four aspects which are concerned with different activities and which are concerned with the finance also. Then another thing we have to explain here, that is business finance necessarily deals with financial problems of the corporate world. It means that business finance necessarily deals with what? This question you should have to ask yourself. Business finance necessarily deals with financial problems of the corporate world. Deals with financial problems of the corporate world. You should have to know the meaning of corporate and meaning of corporate world. Okay, and with the help of such type of a business finance, definitely you can make different types of the dealings, you can solve different types of the problems, you can fulfill different types of the needs with the help of the finance in the corporate world. That's why the concept of business finance you should have to understand in clear cut manner. Okay, then there are different types of the definitions given of the business finance. What is the exact meaning of definition? Do you know? Definition is nothing but an explanation of particular concept made by the particular thinker. That is called definition. Now, we have to understand the definition of business finance. There are different types of the definitions given in the books of the business finance, but some important definitions we have to understand for the reference purpose. First definition is given by the husband and Dockery. What is it? Corporate finance serves two important functions. Try to understand. Corporate finance serves two important functions. First, it is a means of assembling the funds necessary to initiate new business. Assembling the funds necessary to initiate the new business. It means that at the initial stage of the business also fund is required. Okay, for starting the business also fund is required. And second, and much more important, it improves the basis for continued operations. And second thing is also there, After starting the business, you should have to continue the business operations, and those business operations can be continued with the help of the sufficient funds. Without fund, nothing is possible. Don't forget it all. That's why for carry out the business activities, funds are required. Then another definition is given here by the Henry Hoagland. According to this fellow, business or corporation finance primarily deals with acquisition and use of capital by business corporation. It means that business finance primarily deals with acquisition of funds. After acquisition of funds, you have to use that capital by business corporation. Okay? Corporation finance is not a complete philosophy. Try to understand. Corporate finance is not a complete philosophy of a business corporation. It is an application of common sense principle. It is an nothing but an application of the common sense principle of one thing at a time. One thing at a time. This is called business finance. Now, what are the objectives of business finance? Those objectives also we have to study in detail. First objective is here to ensure supply of sufficient fund. How it is possible? With the help of sufficient finance, sufficient supply can be possible. Sufficient supply of the fund is possible when your business finance is also in good manner. That's why, what is the first objective of the business finance? First objective of business finance is to ensure supply of sufficient fund. Then second objective is also there. What is it? To minimize cost of funds. Your cost of funds should be minimized because such type of funds should be affordable to any type of organization. There should not be much more cost for creation of the funds, okay, and that is not affordable to any type of organization. That's why the minimum cost of funds should be there, and this is the another objective of the business finance. Then next objective we have to understand, that is to match cost with risk. There should be matching between cost and risk also. It means that there should be equation. What is equation? Whatever may be cost you are going to incur and whatever may be risks you are going to bear, those should be matched with each other. Okay, that's why to match the cost with risk, that is also another objective of the business finance. The next objective of business finance we have to understand, what is it? To provide flexibility in the plan. Why flexibility is essential? Wherever and whenever management want to make change, that change should be made easily. Okay, that's why there should be flexibility in the plan, and to provide such type of a flexibility in the plan, this business finance is essential. That's why this is the objective of business finance, to provide flexibility in plan. Okay, then another objective is also there, to keep this simple capital structure. Your capital structure should be simple. When you can say your capital structure is simple, if your capital structure is easy to understand, if your capital structure is easy to write, if your capital structure is easy to remember, if your capital structure is easy to recall, then and another thing is also there, if your capital structure is easy to implement, then you can say the capital structure is very simple. How you can say that capital structure is very simple? These are the objectives we have to understand. Now, what are the scope of the business finance? What is the scope of business finance? We have to understand. In that scope, two things are included. First thing is sources of funds, and second thing is use of fund. It means that whatever may be funds you are creating with the help of the different types of sources, that fund should be utilized in proper manner. That's why there are two particles of the scope of the business finance. First particle is sources of fund. Different types of the sources we have to study. And second particle is there, that is use of fund. After collection of the fund, after creation of the fund, it should be used in proper manner. That's why the scope of business finance is divided into two particle. First, sources of funds, and second, use of fund. Try to understand what I'm speaking. Then sources of funds. What are the sources of funds? There are two types of the sources of the fund. First, ownership resources, and second, creditorship resources. In that meaning also, in that word also, you can understand what type of resources are there. Ownership means our own resources, and creditorship means borrowed resources. Try to understand. These are the different two types of the sources of fund. First source, ownership, and second, creditorship. Now, in case of ownership resources, we have to understand what are the different resources. External share capital is also created. External share capital, it means that we can issue ordinary shares, we can issue preference shares, and with the help of such type of issue of the shares, we can create the external share capital. Okay, and the another aspect is also given here, internal reserves. Different types of the reserves can be created in the business. For example, general reserve is also there, then building reserve is also there, then dividend equalization reserve is also prepared. Okay, different types of the reserves are created there, and those internal reserves also business can use wherever and whenever the need will be in future. Okay, that's why there are two types of the ownership resources. First, external share capital, and second, internal reserves. Then creditorship resources, what are those? With the help of creditorship resources, business can create also fund, and these are also creditorship resources. First resource is there, short-term loans. Okay, what type of loans? Short-term loans also created with the help of the creditorship resources, and with the help of the short-term loans, business can fulfill its need. Then second resource is also there, long term loans. Okay, long term loans also can be created. Okay, and with the help of such type of long term loan, long term business need can be fulfilled. Then another resource is also there in creditorship resources, that is debentures. What is it? Debentures. Issue of debentures, and after issuing the debentures, business can fulfill the need also. Then public deposits. Business can accept the public deposits, or deposits can be accepted from the public by the business, and that accepted deposit can be used for the business purpose, and that's why this is also the another important creditorship resource. Okay, and the last creditorship resource we have to understand, what is it? Trade credits. It means that trade credits, some relaxations are also given for the payment. 30 days credit is given in the trade. How much credit is given? 30 days credit is given on the trade and business. Okay, in the trade and business also such type of a credit is given, and with the help of such type of a credit period, we can fulfill our short term need of the finance also, fund also. In this way, these are the five resources. How many resources are there? Five resources of creditorship. Okay, first, short term loans, second, long term loans, third, debentures, next, public deposits, and the last, trade credits. Okay, then use of funds we have to understand now. In the last few minutes, we have considered how funds can be created. Now, how funds can be applied. It means that application of funds or use of fund we have to understand. Management of fixed assets and management of current assets. These are different types of the assets. There are two types of the important assets. Okay, what are the two types? Fixed assets and current assets. Why fixed assets are essential? Fixed assets are essential for starting the business, and current assets are essential for running the business. This is the basic need of the fund. Okay, and this basic need we have to understand. It means that for starting the business, we have to manage the fixed assets, and for management of fixed assets, fund is required. And now for running the business, we have to manage current assets. It means that for management of current assets, funds are also required. In this way, fixed assets and current assets are managed, and for management of fixed and current assets, funds are used. Now, management of fixed assets. There are different types of the management. Owning assets are also there. We can purchase our assets, and those assets are called owning assets. Also, we can purchase the assets on rental basis. It means that on rent basis also we can use the assets, and those assets are called renting assets. And the last type is there, leasing of fixed assets. On particular contract, on particular lease, such type of fixed assets we can use. That's why this is the third source of the management of the fixed asset. What is it? Leasing of fixed asset. In this way, these are the three different types of the way of management of the fixed assets. What is the first way? Owning the asset, owning assets. Second, renting asset. And the last, what is it? Leasing of fixed asset. It means that management of fixed asset you can make in these three ways. Then management of current assets. Current assets are required for running the business. Try to understand. And such type of a current assets you should have to keep revolving. There should not be rest is given to the current asset. Current assets should be revolved continuously. Okay. Then accelerating the motion. For acceleration, for giving the acceleration the motion, what is required? Current assets are required. And the last point is also given here, use of consumer credit. With the help of consumer credit also we can fulfill our need of the current assets, and 30 days credit is given. How much credit is given? 30 days credit is given for use of credit. In this way, management of current assets is done in these three ways. First way, keep current assets revolving, accelerating the motion, and use of consumer credit. In this way, we can manage our current assets in systematic manner. Okay. Now, social and economic significance of business finance. Why business finance is essential? If you got the answer of this question why, definitely you will understand the social and economic significance of business finance, especially organization of business on corporate basis. Okay, organization of business is on corporate basis, and corporate basis you have to understand what do you mean by corporate. In the large scale this word is used. That's why there is automatically you will find increment in the size of the business. Okay, and if increase in the size of the business, definitely required fund is also increased. Okay, then more public responsibilities are also there. Different types of the responsibilities laid on the business, and such type of more public responsibilities if you want to fulfill at that time, definitely more fund is also required. Okay, then wide distribution of corporate securities. You can wide distribution of corporate securities. Worldwide distribution is also possible. Don't forget, in whole globe also we can distribute our corporate securities. Okay, that's why business finance is essential. Then divorce between ownership and management. Try to understand, ownership of business is different and management is different, because each and every person is not having the knowledge of all things. That's why he has to take help of the others, and for the management purpose also he has to take the help of the expert managers. That's why owner is different and managers are different. Ownership is different and management is different. That's why you have to understand the meaning of this statement. What is it? Divorce between ownership and management. Now, adequate and regular net return on investment should be. Your return should be adequate first. Try to understand. Your return should be adequate first, and it should be regular on the investment, and for that purpose also finance is essential. Okay, Then growth and prosperity of business. When business can be grown? If you are having sufficient fund, and when prosperity is possible, if business is also having sufficient finance, then and then growth of the business is also possible and prosperity of the business is also possible, and for that purpose also finance is essential. Okay, now significance of management. Assistance in assist It means that management assist in assessment of financial need. Try to understand. Management assist in the assessment of financial need. Your financial needs should be assessed. Then management indicates the internal and external sources. Management can indicate external and internal sources. What are the internal sources of the funds and what are the external sources of the funds? It means that internal and external sources of the funds can be indicated with the help of the management. That's why business finance is essential to the management also. Then assess the efficiency and effectiveness, whether your fund is effectively and efficiently carried out or not. Such type of assessment is also possible with the help of finance. Then prescribes various means of mobilization of savings into desirable investment channels. Whatever may be savings are there in your organization, those savings can be invested in desirable channel, and for that purpose also business finance is essential. Then directs attention to the urgency of regulation. Business finance directs attention to the urgency of regulation against faulty and fraudulent financial practices of management. It means business finance direct attention to the urgency of regulation. Whatever may be urgency of regulation is there, that should be faulty and fraudulent, and it should be pointed out by the management, and management can point out such type of a faulty and fraudulent financial practices. Okay, that's why it is important. Then business finance examines the defect of relationship between industry and financial institutions. Try to understand. Business finance examines the defects of relationship between industry and financial institutions. Also, management can help to judge the financial soundness. Management can help to judge the financial soundness and solvency of the corporate enterprises. That's why it is important. Then management protects the shareholders and other persons dealing with corporation. It means that the interest of shareholders should be protected by the management, and also interest of the other persons should be protected by the management. Management determine the role. Management determine the role to be played by the state. Management determines the role to be played by the state in exercising control over the capital issues, exposing the tax on corporate sector, and providing finance directly or indirectly. And for that purpose also, that is important in business, and business finance is also important. Thus the knowledge of principles and practice is essential. Try to understand. The knowledge of principles and practice is essential. It helps in profit planning, it helps in capital spending, it helps in measuring the cost, it helps in controlling the inventories, and it helps in accounts receivable. In this way, the knowledge of principle and practice is essential. In this way, there is a importance of business finance. Okay, thank you very much.